Hey folks, part two from chapter 4. All right, anyway, I decided I'm going to tell you that story later in a separate little video. Anyway, now we're going to take a look. Theft in the mailroom, incoming checks. So again, depending, you'd have to see how the company does it, right? So the employee that's charged with opening the checks daily basically takes them instead of processing them. By the way, if you have two people do this, that can eliminate a lot of your problem. Okay, when it's a single person, it's all too easy for them to slip it into their pocket and then do something with it. Okay. Now, most of the systems, so what they're talking about here, notice they say mixed systems and system interfaces. So theft is easier with a manual system because it's harder to catch. It's possible with the computerized systems, but most have a two-part. One part is manual and one part is computer. So anytime the manual system, there's a risk. When it's done the old-fashioned way, okay, when it's done via computer, somebody has to go in there and do some sort of adjustment to conceal what they've done. With manual, they can do that as well, but it's not normally as necessary. Okay, so basically it's pretty easy to hide this, at least for a while. Okay. Now, what can you do to prevent and detect sales skimming? Right? First of all, it's oversight, especially where cash enters. Management, clustering registers, video camera, in other words, having all the registers together. Remember in stores they used to, well, I don't know if you do or you don't, but back in the day, not all the registers were in one place. Like, I remember back in the day, JCPenney had them all over the store. Okay. Another way, some customers complain. They don't get their receipt or something like that, a tip. Checking the logs, log out times. Logs for offsite personnel. Again, sometimes you could check the logs to see. And again, anytime you should have at least 2 or more employees involved in opening the mail or logging incoming payments. Okay? And the reason why is with one person, it's easy to hide. Okay? Also, big data nowadays, you can use big data and data analytics. So now when you have electronic registers, right, they can track a lot of different things. Okay? So you could take a look, highlight different things, different activities by location, employee, by terminal. So if you're noticing a lot of discounted items, if you're noticing a lot of items written up, rung up under a code for a discount or a code of an unknown product, something like this, okay? So now we're going to talk about Module 2, doing more skimming the receivables, okay? It's more difficult than skimming sales. Receivable payments are not logged into the accounting system. So here, when you're skimming sales, it never gets into the system. Skimming receivables means it's already in the system. Okay, so they have to use something to write it off because now it's in the system. See the difference? Sales not in the system, receivables in the system. So they either have to force the balance, they have to steal statements, they have to do fraudulent write-offs, they have to do this lapping where they credit somebody else's account, destroying or altering records, debiting the wrong account. Again, all of these are done because there's already something in the system and they have to hide what they do. Okay. One of those methods, lapping, okay. Look what lapping is. Lapping customer payments, it's one of the most common, crediting of one account through taking money from another. So essentially robbing Peter to pay Paul. Okay. And by the way, this goes on and on until someone discovers the scheme. Something happens. Somebody reports on their account. Okay. And lapping can also be used to disguise skimming of sales. But what happens here is when they're busy doing this, somebody calls to check on their account, and all of a sudden there's a payment not there. You know what I mean? This is usually what happens. Somebody says, no, I have a canceled check here for $10,000. We made that payment. Company says, no, you didn't. The selling company says, no, you didn't. The purchasing company says, here's the check. And then they start to look. Okay? And by the way, that's essentially, lapping is essentially what a Ponzi scheme is. That's exactly what Bernie Madoff did. Okay? He used the incoming money to pay the older people. So it was taking this money to pay for that money, and he was busy taking money in the middle. Okay, forced balancing is exactly what it sounds like. They force the balance somehow. Okay, and usually this is because the fraudster has both hands in the reporting process, both the sale and the collection. So in the collection of collecting and posting payments, when somebody has that, they can just force, it's like manipulating the books. They're actually manipulating the books here. Stolen statements, this is essentially customers' payments are stolen, not posted. So what happens, the customer doesn't know, unaware, the true status of accounts. By the way, one time I owned an auto repair shop, one of many businesses, and I had people were auditing. So I was purchasing from the company, and the company, their auditor sent me, what do you show as your current balance? What do you show as your payments? And again, this is where auditing, it could get caught in an audit as well. If you have a discrepancy between, well, I say I owe you $15,000 and you say I owe 25, and I'm like, wait a minute, I got all the cash checks. Now we got a problem. Okay. So stealing statements, again, all these things are only going to last for a certain amount of time. Write-offs or discounts, again, somebody that has the authority to do it, that's a problem. So intercepting these things, skimming these, notice some employees cover their skimming by posting entries to contra revenue accounts, such as discounts and allowances. Like all of a sudden, like a customer comes up, if you're a cash register person, somebody comes up and, hey, listen, I want this thing. I want to buy this thing. It's got a little ding on the side, and they have the authority to ring it up. They might be ringing things up and then going in and creating some sort of discount and pocketing that difference in money. They might be creating discounts that aren't actually there or aren't actually legitimate, is what they're getting at. Okay? Debiting the wrong account, again, this is to hide the balances. This is kind of like, well, let me change this to a pen. This is like a shell game. Where is it? Okay, so they're busy hiding it, moving it around, right? They're busy hiding it and moving it around, and so what happens is you can't locate it. So they put it in this account, and they move it to that account. Again, that's somebody that knows the books and knows the processes. Somebody that knows the process a company uses, they can be very dangerous. Okay, destroying or altering records. Again, that's pretty obvious what would happen, altering records, right? Okay, to cover their tracks. Cash register tapes can be destroyed. They can be doctored up. And then again, if you're using a more manual system, that's easier to do than if you're doing a computerized one. And if you have a computerized one and you have video, so you could see where the internal, this is all about, go back over here. This is all about internal controls. Audit, right? How strong are these internal controls? Are they being followed properly? Are they properly designed? Okay. And again, this is management's responsibility. Okay. So there you go. How do you prevent them? So how can we keep this from happening, right? Strong internal controls, we just mentioned that. Separation of duties, rotate jobs, right? Because in order to hide some of this, you have to be doing the same job because you have to keep hiding it. Make employees take yearly vacations. Who's gonna keep hiding things when they're not there? A lot of times. By the way, people in banking, they're required. My son's a banker. He's required to take vacations for that reason. Not because they're trying to catch him, but because that's what they do. Okay. Supervisory approval for write-offs or discounts. If you empower your employees a little too much, it could cost you. Properly trained audit staff know what they're looking for. Different automated tests, trend analysis on aging of customer accounts. Things like this. So, the idea of big data or using some sort of analytics makes it easier to track and to find these things. Okay. So that's why computers are super important. And that's why something like IDEA, that software, is very helpful to us. All right, folks, that's part 2. We'll be back with part 3 in just a minute.